All right, everybody, good afternoon and welcome to my equity asset allocation application. What this is I see a lot of applications that help people choose individual stocks, and I think there's a significant gap when it comes to actually building a holistic portfolio. So this tool is to help people decide where their risk is, what they think their return should be, and how to allocate stocks into a portfolio. So let's get started. Real quick, upon opening this, I'd encourage everyone to take a look at the glossary. There are a couple important terms here as well as the hotkey layout. Also take a look at the settings. You can set your time frames. You can set some graphing settings for some more sophisticated graphs. You can also set your simulation options between random walk, normal distributed returns, and historical performance, as well as reset all your data if you want to re-download it. Now let's get started. So we'll just take a look at a single stock real quick. Nothing too exciting. So for NVIDIA here, we can see what their historical return over the past 5 years is. Now let's get into more of the meat and potatoes. Let's actually build a portfolio. So let's add, that doesn't work. We got to do actual, GE is the right ticker with 10 shares. Let's add AT&T to that as well. And let's add, let's say Cisco. Cisco's a good company. We like them. So now that we have a portfolio built, we can actually start doing a little bit of analytics on it. Let's plot all the holdings and see how each of these stocks is done individually over time. So we're going to name that plot. And we can see that over time, Cisco's done pretty well. AT&T has been kind of meandering to the low side, and GE did pretty poorly. This is a pretty good distribution. Will be good to actually show the robustness of the application. So now let's look at our run simulation. We're going to generate a Monte Carlo random walk right now. And what it's going to do, it's going to generate a bunch of random returns based on the deviations historically of these stocks and show us what our risk to our reward could be. So we'll name this as plot 1 real fast. And we can see here, based on this stock, we have about a 2 in 10 or 1 in 5 chance of losing money. And we have about a 1, 2, 3, 4, so a 2 in 5 chance of making some pretty decent money, as well as a 4 in chance of really just kind of staying where we're at. Let's run this again just to make sure that this is the actual distribution and it's not just a one-off simulation. Let's call it just something again real quick. And here we go. So we also, again, we see that there's a 1 in 10 chance of staying kind of steady, as well as some decent chances of making some pretty good gains. So this is actually what I'd say is probably a pretty well diversified portfolio. And if you kept running this, hundreds of times, you'd see that you'd actually skew towards gains here. So you can actually be pretty safe in thinking about this as a portfolio and making investments into it. Now let's see if there's anything else that we could add to make it better. If you click on Get Recommendations, the program will actually spit out stocks that you could look at from the Dow 30 components. So here the program is saying that Caterpillar and Walmart would be good additions to our portfolio. This is because they probably have high risk to reward ratios. So if you look over here, the Sharpe ratio, this is the ratio of the volatility to the return of the entire portfolio. So if these have higher Sharpe ratios, it'll recommend that they add it, and it'll probably generate some better returns for our portfolio. Now, there's a lot to do here, a lot to play with, but before I run out of time, I want to go to the professional. This is probably one of the neatest applications that we have here. What this will do is this will finally give us the weights for our portfolio. It'll take a few minutes to generate, or a few seconds to generate, I should say. And when it's ready, we'll name this real quick. It'll actually come through and it'll show us the overall application or the overall asset allocation for our portfolio simulation. So we can see here that to minimize the risk that we have and maximize our returns, which looks like about 6% return, we'd come over here and we'd put 20% of our portfolio into GE, 43% into AT&T, and 36% into Cisco. If we wanted to maximize our returns without any regard for risk, we would actually weight everything to Cisco, which makes sense because if we looked earlier under plot all holdings, Cisco was easily the highest performer. So that concludes this. I hope everyone finds this useful. There's a lot of functionality here, and this is something that I actually hope to use with my own asset allocations when I start planning for retirement. And thank you.